Tuesday, April 25th. Market analysis, Stan Ehrlich. Good morning. 10:15 California time. A little late for me today, but I wanted to wait to see what was developing because earlier this morning we gapped down. There are no gaps to go back up and close because of the lower openings in some cases. That happened early. Now, we started to break down pretty good. We haven't seen a 5.5 point down day like right now in a while. This is breaking the lows going back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 11 days. We're at 407 exactly. And this is what I was expecting. We're at 407.20. And I'm looking for 96.5, 96.25, something like that, in order to close a gap, which is down here. The high of which is 98.75, but the gap doesn't get closed until you get to the bottom of it, 96.16. So 96 something, low 96 is better, 96.16 is perfect. Soon. Now that means we got to drop 11 more points. We're down 520 right now. So 11 more points shouldn't take very long, especially when bear moves fall faster than bull moves go up. So we're on our way. Unless something very bullish happens by the close, which doesn't seem likely. We have new lows and new low closes very likely now for about 11 days. On the daily data chart here on the right, the spider is clearly breaking support, except for the last support area, 405.60-ish. And that is the lowest level since the market started getting overbought, since the market had two bearish engulfings. We almost had one yesterday, but market came back up to close higher on the day and didn't do the job. Anyway, I like what I see. I've been talking about the damn thing for weeks, and finally it seems like it's starting to come true. So I want it to stay down here, 4, 5, 6 lower, something along those lines, or more, to be a short-term bearish breakout, to come down and close that gap down in this area here. Again, 396.16. I'll be more exact for you. 396.49 will close the gap. So call it 50. 396.50, not 16. Now, 11 points lower, almost exactly from where we are at this moment. Should be on our way. But again, been talking about this for a week or two. Let's go look at the DIA and the QQQs, see how they're doing. Okay, the DIA is making new lows for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, and is now below the low of two bearish engulfings, one of which is working just great. The third one, which is almost at the high of the rally in the DIA, created a bearish engulfing on April 18th. We now have a new low and a highly likely new low close as well since then. Great. Now, I didn't get, unfortunately, a signal on that date or the top of the market on the spider or the Qs, but the DIA we sure as heck did, and we talked about it being a darn good fill the next day on an ER3 short. Remember, ER1 always gets long or short the day of the signal when it turns red or green on your daily data chart. ER3 enters the trade on a retracement. And so is missed sometimes. We don't get into an ER3 trade sometimes. No money lost, but then again, no money gained. Now, there's a gap to close on the DIA around 329. not to be too specific at the moment. And we are doing just like the S&P, breaking significant number of previous day lows, and apparently going to be closing in that territory also. Looking good as far as my expectations concerned. Now, this is all very short-term bearish expectations. This is Tuesday, could happen by the end of the week. I certainly expect it to happen by next week, and that is closing those gaps. Let's see about the QQQs. Now remember, a little bit larger picture here. On the way up, the QQQs, and I'm talking about since October 13th, when we had a bullish engulfing ER buy signal at the bottom of the bear market for 2022 and the very beginning of the bull market for 2023. You can't get a more accurate timing to the exact day of a huge turn. Enough said about October 13th. Well, actually, I couldn't never say enough about it. It was a great signal. And told you it was coming in advance. And the day it happened, I screamed bloody murder for you. Now, there's a gap to close that's not very far away on the QQQs. It's been the strongest all along, so maybe it's not going to come down as much. So that fits the bill with the Qs. The one that's been the strongest lately has been the DIA. It's gone up in the last month or so and made those new highs. The Qs double topped out. The spider's kind of caught in the middle. So all three indexes have gaps to close. And I'm watching very carefully as to which ones close the gaps first. It looks like the Q is going to do its job first. Then maybe about the same point in time, the DIA and the S&P. Anyway, I'm going to be very, very interested in being a buyer when we close the gaps. Notice the RSI on the QQQ is already down to 31. That's pretty low. I like it down lower than 30 in order to generate a signal for my system. And that seems to be quite possible in the next day or so, and even today, if it were to stop to drop off even faster. So I like what I see. I'm looking for reasons to buy very soon, and then for the bull market of 2023 to continue to do high ground for multiple months. Hey, let's go look at the futures. So the S&P is also an index and a futures contract on the E-mini, and it's doing the same thing basically that we had in the other indexes. Okay. Next, bonds. Now, we talked about support potentially causing it a reversal. I don't see, quote, unquote, a bullish reversal. All we did was bounce off support. And today, a whopper of a rally, blowing away from the few trading days, which was a test of support, right in the 129.20 area. And zoom, here we are, 32.15. So I believe we're building a long-term bottom in 10-year notes and 30-year long bonds, interest rate futures. The close above 134.5 is going to be the decisive day for a major long-term bullish breakout. And it may not be too long from now. I started talking about this a couple of months ago at least. So that's the key here. Let's see what happens on the 10-year notes. Same story, major long-term bullish breakout if we can close above 117. Currently 15.24 and 25 for whatever. Bounced off support, just like the bonds. Basically the same formation, although months and months from now, people will look back and maybe call this a broad double bottom on the 10-year notes, a low in late October, middle of October, and a low here on March 2nd. They're pretty similar in price, very close. So it would look, for instance, on a weekly chart, like a broad double bottom formation, especially if we have a long-term bull market in progress here at the early stages. Yep, that's what it'll look like. Okay, so next chart. We came up against resistance in crude, stopped. We talked about it closing the gap many times before it started closing the gap, which was late last week. Now we have a new low by a couple of ticks and potentially a new low close on a hefty down day. So we are almost finished with that gap. Now, unfortunately, we're not that close to being oversold. It doesn't have to be oversold in order to turn back up again. But ladies and gentlemen, just look at the correlation here. Prices turn yellow. My custom RSI turns yellow. They're below certain criteria. And when they're both yellow, you're probably going to get a turn back down or a turn back up. Looking at just the bottoms here, it turned up. It turned up. It turned up, but it didn't have to be as low, which is what we've just done here. So if it closes a gap and doesn't get oversold, it does not mean you can't go back up. Going to watch very closely to see what happens. Here we got oversold, it turned back up. Here we got oversold, turned back up a little bit. Again, and a rally and a rally and a rally. Although it was still a bear trend, the oversold conditions still caused rallies. It's not necessarily going to be the bottom of a 10-year bear market and the beginning of a 10-year bull market, although that wouldn't surprise me. But it happens only once every 20 years. Okay. Next chart. Heating oil. We got a buy signal yesterday in heating oil, and it looks like it's an immediate failure. That tells me that we could be heading south right away. So there's a small loss on yesterday's new buy signal. Remember, we don't stick around to get hurt. We always have a protective stop in immediately upon getting into the market. Pre-decided, pre-programmed, period. ER, signals, trading system. 100% automated, bullish and bearish, stocks, indexes, forex, sectors, futures, you name it. The system's based on the way people think and reflect their attitudes in their buying and selling habits. We caught the top of the market, red bearish engulfing on heating oil back January 24th. I'm bearish because the trend is down, and I think these support levels I've been talking about for a long time are going to get broken. And wow, is that going to be a major bearish signal? Next chart. Natural gas probably is going to get pulled down with the heating oil. Not necessarily, but probably. So for the moment, this chart individually looks pretty flat, pretty neutral. It's losing downside momentum for the moment, and it's just hanging around sideways. Next chart. All three, gold, silver, and platinum, we caught the bottom in the gold market February 28th, green buy signal. But there's a topping formation potentially, and I'm turning neutral for the moment in gold. I don't have any sell signals. I'm just losing momentum, and it's very undecisive at the moment, so I'm going to wait on a comment. Silver. I talked about a possible head and shoulder top. This would be the shoulder on April 5th. The top of the market's a bearish engulfing ER sell signal. Of course it is. The top day, April 14th. And the last shoulder high would be February 20th. We just yesterday, excuse me, today, broke the neckline. Now the pattern's not big time-wise as well as vertically. So I have a minimum, very important word, minimum downside objective 23.2. That could come and go in a matter of just a couple of days, very short period of time. But I said minimum. Chart patterns typically have a measurement you can make, and that is the expected if it works correctly. They don't all work correctly. If it works correctly, objective. But they frequently produce much bigger moves than the minimums that are the expectation. So I'm bearish at least at 23.188 or lower. We need to close below the neckline, which is the blue horizontal, almost flat, slightly upward slanted. We got below it already. I want to get below it again, stay below it on a closing basis. Breaking it and closing below it's not what's supposed to happen. You get below that neckline and it's supposed to stay below it and go down even more quickly. So that's one thing I'm looking at that is not terribly normal. Can be corrected by the end of the day or tomorrow, as long as it doesn't start to go back up. I'm going to say my fail-safe at this particular point is the high of today. I certainly don't want it to go back up there. So if you choose to get bearish and act upon that expectation, I would consider a stop above today's high. Next chart. And you might be a little premature, remember, we haven't really closed yet below the neckline. Next chart. Platinum. Yes, we caught the bottom of the market, green, bullish engulfing, February 27th. It got terribly overbought 2 days ago, and yesterday, miserable down day. I talked about that. You have a new low and a new low close for at least 2 to 3 previous days. Today, it's going up a tiny bit after dropping off more. I'm looking for a little bit more of a correction. And that's about the best I can say for the moment. I'm not sure whether this thing topped out for a big move down or not. We did catch the top. We caught the bottom. We caught a few highs in here and a whopper back there and a low. So we got a good track record on the platinum for signals. I'm just not sure at the moment. Next chart, live cattle. We got a sell signal 4 days ago. So far, no problems. It's starting to come down today. It looks like it's going to be the lowest closing for the previous 3 days. I want to see a new low, lower than last week's low on a closing basis. And then I'll feel firmly that things are underway. We got a great buy signal very close to the bottom. And this a sell signal that worked for a couple of days, not very much. This one looks like it has a darn good chance of being a lot more bearish. I would expect a downside retracement to 160 approximately. Next chart. Getting oversold in copper, dropping off to a support area. So I would not be inclined to chase this market down. How come I don't have a cursor here? Just a second, people. There we go. So now, oversold condition. Let's see if it can break this support level. If so, then you got more downside potential, even though we're oversold. Remember, it doesn't have to be only a single day of being oversold. It can be 2 or 3 or 4 or even more, a couple of weeks worth way back here. And look how far that drops very, very quickly. So the oscillator can be tricky to use. One reason I'm using the bullish and bearish engulfing. High grade copper, I'm not sure. Next chart, soybeans. Also oversold, probably going to bounce soon. Not quite at any particularly important price level per se. It could get down to this previous low for some support. Just don't go short. It's too risky. Remember, these things can open a lot higher the next morning. Markets move on anticipation and reverse on realization. One of my favorites, came up with a couple of decades ago. I like that very, very much. Soybeans, don't go short. Next, soybean oil, don't go short. Same thing. Support being approached, oversold conditions. Next chart. Corn, bearish engulfing yesterday, dropping off very nicely today. Signals working great so far. Remember, we're short from approximately the middle of yesterday's red bearish engulfing when it broke below the previous day's low. And it's just making more money today. So the second day of profits and increasing profits for the ER1 and the ER sell signal. Next chart, wheat, getting oversold. Grains, yeah, wow, coming off here. So don't go short. Probably sell on a rally. Next, soybean meal, breaking that long-term bull trend line. Very interesting. It is also, one could say, an upward slanting channel since approximately April, May, June, somewhere in there. And a fairly accurate series of highs for resistance, a bullish resistance line. Bullish because they trend upwards, but resistance because every time you get up to the damn line, although it's a new high, it's stopped at the lines. So it's the top of an upward slanting channel. Now the bottom is broken. Second day now, but it got a little oversold, not uncommon on a bearish breakout. Maybe a good short sale on a slight rally. Next chart, live hogs. Bullish engulfing at the bottom so far. 2 days later today, we have a minor little dip. Trades working okay, signals working okay. Let's see how it continues to pan out here. You certainly had profit potential on the same day as the signal and the next day, and potentially a little bit this morning as well. That's hogs, Miss Piggy. Here we go. Next, OJ. Bullish, can't help it. Did have a pennant, broke out of it, got overbought, slipped off a little bit, eliminating the overbought condition quite a bit. And now looks like it's going to make a new high again. Next, cocoa. I'd buy a break, not sure. It looks like probably in the ballpark of 28 in the next few days, next several days. Next chart, sugar, overbought. Don't run after it. Probably going to drop like a rock all of a sudden, and you will have bought the high day, almost a guarantee. Be patient, wait for a retracement. Next. And back to the E-mini. I do want to show you on the forex. We have the euro dollar, and we had a couple of bearish engulfings a few days ago. Now, we didn't get higher than the first and the highest high for the trend bearish engulfing during today's early rally. So it could end up being a double top. And we still will have gotten the high day for a sell signal. But the strength we saw yesterday and a little bit of follow through today was more than I would expect for any of my strategies, and we're flat. If you choose to get short again, you want to see very quickly a move below 109, 109, yeah, period. And today appears to be a bearish engulfing. So with an outside down day and a double top, that could be a very good combination as far as being bearish is concerned on a short-term basis. Remember, the formation is only 2 weeks in size. It's fairly small. That no other forex I have comments about at the moment. And that is it for today. Thank you very much. Talk to you tomorrow.